Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. Season 4. That's crazy to think that when we started this, the average podcaster only makes about 2 or 3 episodes, I guess. We're at this is episode 37, start of season 4. We are talking today to Chris Woodhouse. Now, Chris's background is quite interesting. When I got looking at it a little bit more, I didn't realize you were actually a mortgage broker at one time.
I was, yep.
A few years ago, right? But obviously over on the lender side since almost a decade or more. I have a feeling you've been hanging around with the same guy all the way through there by the looks of this. So,
yeah. So I did do the brokering side for a bit. Just found that a lot of folks were using just 2 specific lenders were in the area that I was. And then I met a gentleman by the name of Paul Graywall who asked me if I'd be interested in joining the lender space. So I did that. Had a great time at Street Capital. We ran a lot of great numbers, and ultimately RFA took over. I stayed with those folks for a bit, and then ultimately it feels like a nice little homecoming where I'm joining Paul again. So Paul's obviously a great mentor and somebody that I definitely hitched my wagon to.
Yeah, excellent. So I was on the website this morning. I love the intro. Don't find too many with music in them. And the drum beat is always exciting. Looks like a very seasoned executive team. So maybe let's talk about how this all became about.
Yeah, right before COVID, Paul was looking to do something down the mix space, trying to create a bigger mix that would probably be looking to buy mix that would be pennies on the dollar. Unfortunately, a little thing called COVID came into play, and that same dollar was now worth $1.25. So you're paying a little bit more of a premium than what was anticipated. During that time, he decided to pivot. Himself and Leon DeDune had known each other from previous worlds back in the CIBC days. They started to have a couple cups of coffee, a couple lunches, and decided that they wanted to enter into the insured and insurable space and ultimately in the mid-market alt space. So that's where the ball started rolling. Towards the end of last year, Paul and I ran into each other and we started some conversations about, hey, how would you feel about joining a startup? Obviously, it took a little bit of time back and forth, and ultimately I made the move, and I can tell you that anytime joining with Paul and Leon is always going to be a great thing, and we're establishing something that's pretty unique over here.
Right, and that was kind of one of the thoughts in putting questions together. So, what makes Highclere different than what you've experienced in the past?
And this is no disrespect to anybody that I've worked with previously. Obviously, the people are what make the difference in any organization. And from the top down, I mean, Leon's got a great skill set with capital markets and securitization. Paul brings a ton of experience, as we all know, into the mortgage space. I've been around for a long time. Moderidia has been around for a long time in this space. And it's just collectively, we've all grown together and we're all pulling on the same rope, which, again, other places that I've worked in the past has also done that. But it was really unique joining from the ground level up, where everybody's opinion matters. Everybody's pulling on the same rope to create a very unique culture, and more importantly, a very transparent culture, which is something that we're thriving on.
Just from the short amount of time that we've had experience with your underwriting and so forth, is there more of a vision about using technology?
Tech is really helpful. I've always been tech averse. For those of you who've ever listened to me before, my tech skills range from have you turned your computer on and off, and that's about the extent of my personal tech. But at the same token, AI is becoming a lot more to the forefront. Same thing with like ChatGPT and all those other great things. So AI is the backbone of our underwriting system. Now, it's not going to replace the folks that we currently have. It's just going to help be a very good assistant. And what I mean by that is, if you've got somebody who's 19, you send in a file and it shows that they make $2 million annually, it will just red flag it to say it's not saying that it's not true. It's very uncommon. So at the end of the day, maybe you want to focus on this area. Everything else kind of looks good. The more that we feed into it, the more it becomes a lot quicker, a lot smarter, and is able to help us underwrite those deals a lot quicker. and a lot more efficient.
Yeah, and that's not uncommon for a 19-year-old who knows AI and ChatGPT to be making a couple $1 million a year these
100%.
days,
Yeah.
but not the norm by any stretch. You actually have to get out of your mother's basement. It's interesting to watch, right? We're seeing a lot of technology, but not as fast as you would think, right? It's still a lot of hands-on being done with the lenders, doc review, things like that, where and of course, if we could ever get the CRA to get their act together and help us with the income verifications, right, that technology will probably push us, ahead a decade just in cutting out the amount of fraud, right, which of course is overhead for everybody, not only for you but for the consumer as well, right?
And as a new lender, we're very cognizant of the fact that we may be a target for fraud, right? The misconception is that new lender desperate for business, let's just throw stuff. I can tell you, we do have a lot of great systems in place, not only humans, but we also have the ability to validate a lot of things. And, obviously, if it looks like a duck and doesn't quack like a duck, we've got a concern. There's definitely a lot of tools in the US that we're exploring for sure. Equifax down in the US has a very good system on how to validate income, and it'll probably get to Canada. It's just a little bit slower to market for sure, but there's a lot of great tools out there that we can look to utilize.
Right, and sometimes it's slower just because there isn't the volume to support it, right? It's strange that is one of the things, but when you push through, you know, tens of thousands, if not hundreds of thousands inquiries a day, Equifax is going, yes, we can do that for you. But
For sure.
when you take 1/10 of that number, they're a little slower to set it up, right? So
For sure. And I would think, Len, the other thing that we've got a benefit of is that we are growing strategically. So we're not just casting a net widespread over top of everybody. Our initial phase is deal with the folks that we have, a reputation with, a relationship with, and start to broaden from there. So again, we've got a very selective pilot group that we're dealing with out of the gates. And it's just, this is what we're looking for. Anything else we're not interested in, right? So we have set out some pretty firm guidelines for sure.
right. Yeah, and that's good because we've seen fast growth in the past not do so well. So let's talk about that growth. Obviously, Ontario and Alberta, and what happens after that.
So we're approved in Saskatchewan. We're just waiting for one final piece before we completely go live. British Columbia is next on the docket. We've got our application in, and the analogy I always use, which is kind of say elementary, but we've all seen them. It's like the Domino's pizza. You don't get that little app that says, "Hey, the pizza has been in the oven. We're checking it for quality. It's now being delivered. Enjoy your food." It's you send off the email, you'll get a couple of correspondence back, and eventually you kind of get that, "Hey, congratulations, you're now officially licensed." Saying that, we've also got our applications out in the Atlantic region with the expectation to be across Canada by the end of 2025. 2026 will be the time that we look to jump into the Quebec market. Obviously, there's a couple different things that we have to make sure that we adhere to. For example, we got to have a brick and mortar shop in Quebec. In addition, all the literature needs to be bilingual. So there is a little bit more of an undertaking, and for a startup, it's something that's going to be happening. It's just not an immediate need for sure.
Right. Yeah. And being licensed myself in 6 provinces, it's I understand the BC process. I'm not sure what it is completely. I'm kind of amazed that Saskatchewan was done before BC. But
were we? We were surprised as well. But you know what? We're happy about it. That's for sure.
Yeah. No kidding.
And I can tell you that not being part of this process previously, and getting the exposure to it now, there's some uniqueness across the board with each province. I'm not saying they're right or wrong. It's just obviously different from what I've seen in the past. So it's been a great adventure going through this. That's for sure.
Yeah, and it's as everybody is licensed under different jurisdictions, right? Under like BC, Saskatchewan, we're all lumped in with the financial planners and the insurance guys, right? So
Yep.
Ontario is like that as well. Where Alberta, it's just we're the real estate council. That's it, right? That's the only entity, and that's Service Alberta anyway. Although I did a podcast with Gary on his way out of the industry here the other day. He still says that's not government, but I still think it is. And of course, Nova Scotia picked up pretty much what Ontario was doing. I think it's quite similar.
I didn't do Nova Scotia or New Brunswick rather because it falls under the Quebec category with us, where it's got to be, everything's got to be bilingual, right? So, which
Right.
is, that if we are a bilingual nation, but province by province, it's different all the way across, of course.
Absolutely. Yep.
Yeah, that's good. That's a good growth plan. So the next step, of course, into the soft B market, as I like to call it, is that in the books as well?
Yeah, so we're in the process right now of meeting our regulatory requirements. So there is a certain number of deals that we have to get done. Once we finalize those, obviously everybody does their quick reviews, and then we're going to dive into the mid-market alt. I think that's a space that's needed in the industry. I think this was one of the bigger drives as well for myself to jump. Obviously, the leadership group is the main reason why I jumped over to Highclere, but this is an interesting time for folks to look at alt stuff. And, I was looking at some stats the other day. Insured and insurable average beacon score was 722. In the mixed space, it was 725. So it's not the old mentality where folks used to say, oh, if you're going MIC, it's because you got poor credit or some credit issues. It's you either have a massive portfolio of rental properties because that's what you're looking to dive into and you're reaching the global limits of different lenders, or it's that you don't really qualify based under traditional means for your self-employed borrowers, meaning you're not declaring your full taxes. The money's there. It's just you're not declaring it with CRA, obviously, right? So for us, we think that this is a good spot if you have a traditional alt lender that's declined a deal. And before you jump into that MIC or private space, we'll fall right in between the two of them. A better rate than a MIC, a little bit higher than your traditional alt, less documentation, and some more innovative products. One of the products that we're looking to launch, which would obviously be a very comparable American type product, would be a 30-year fully open term mortgage. Now, why do I think that type of a product is important? There's a lot of times, Len, and you would know this from your years in brokering, you got a client that walks in your office, hey, next year I'm going to declare my taxes, or hey, next year I'm going to have my credit score all cleaned up and I'm going to be an A client when I walk into your office next year. I don't think that generally happens as regularly as we might want it to. So I think by having a fully open 30-year term mortgage, you can break it on month 17 if somebody's come back to the table with a better credit score. Or there's going to be folks that just say, you know what, I've qualified for this deal. I'm happy with the interest rate. I'm happy just continuing the way I go and just continue to play. Yeah. So the nice part about it is it'll pay you up front, but it'll pay you as almost like an annuity as we continue down the path.
Oh, cool. Yeah, that's probably a part of the market that, that person that walked in the door and says they're going to do that, the successful ones might be 15% of them, 1.5, and the half will take an extra year. But it's always interesting to see. We spend a lot of time and we teach that through our brokerage as well. It is like you might be a private deal today, a year from now, hopefully you're a soft B deal, and then, a year after that, into the A market. But it's pretty rare that it actually follows through. People coming out of bankruptcies and things like that, consumer proposals are huge right now. I can podcast next week is with Sandra's last name at the moment, but we've done several with MNP, right? So, and they do more consumer proposals than they do bankruptcies. Mainly because consumer proposal, when it's put in place, it's signed off and that's it. It's done, right? You're paid out and then your proposal's done. The bankruptcies aren't like that. I didn't realize that, right? They can be ongoing. If your money changes or you can get an inheritance, it changes the bankruptcy yet again, right? So
and so many people think that they're going to be better, this time next year and that sort of stuff. The challenge becomes a lot of times life happens, right? I can almost guarantee you, and I would say probably 99% of the folks had no idea about that little thing that caused a massive wrinkle in their business plans called COVID, right? When everybody did their business planning at the start of that year, most folks didn't have it. I can tell you right now, I was in Jamaica when everything started shutting down. So there was no chance that I had that in my plans. So it taught us a good lesson that, not everybody is going to be in a better position because again, that probably set folks back, 5 years or so, just with the bills that may have piled up. So life happened and we're looking for an option that can help people.
Yeah, and like mortgage brokerages who went up by 100% almost in some cases, I'm sure, right?
Yeah, absolutely.
When rates went to 1.98. I'm talking to a lot of those people this year so far, and they're not happy about the new rate. But yeah, it's funny. I flew home from St. Lucia from an MCAP event 2 days before the lockdown started.
Oh, wow.
I
Yeah.
literally off the plane, got home. 2 days later was, guess we're staying home for a while. Right? So, and that was
I'm
interesting.
actually one of those people that whose deal is coming up for renewal. I'm currently sitting at 1.39, and I've always yeah, and it comes due in February. So we'll see what the interest rates look like then. But
hopefully down a little bit, but I don't think that's going to be the case. So, but and there's a great segue into what do you think the outlook is for the markets?
Right now it's obviously there's more inventory right now than there is some folks buying. We obviously saw that the rates today stayed the same. I don't think that we'll see those sub 2% rates coming down anytime soon. I think we're kind of starting to see a more normalized high threes, low fours to the mid fours. I think that's kind of a safe place for us right now. I think that you're starting to see some other, alt and MIC lenders drop their rates because, again, it's getting pretty competitive out there. Yeah. But I don't think you'll see those days of the sub 2% that are coming back. And if they are, they're going to be for not very long. I think that it's kind of normalized in the mid threes and mid four type range right now.
Yeah, and that's, I think, something like the 20-year average is 4.5% or something like that, right? So we're not too far off of that on one side or the other, although I did get a note this morning that a couple of the big fives are actually moving their rates up. I don't know if they've hit their targets yet. Maybe that may be why. But
yeah, I haven't read that. But
that was a text. That was a heads up. Coming Friday, you'll see some higher numbers, which doesn't make much sense to me at this point. But because the movement hasn't been that big in the bond, right? So it's just 3.08 this morning or something.
Yeah, we send out the bond rates every morning to our internal staff, and it hasn't been an EKG chart, that's for sure. Yeah, I'm surprised by that move. I'll have to double check to see what's going on.
Yeah, well, and it's 3.045, so it actually came down today, some from yesterday. So I'm not sure. That may just be an internal thing, but there's always movement, it seems, going on in the markets, and that's just the way it is, right? So when you start to think about having that other niche, that's an interesting thought as well. But when you're talking about private lending, I saw one. I got a call yesterday, and the guy goes, "Well, I've got a private, and it's out of BC." I'm going like, okay, so. And when he told me the rate, he said, "Well, we're thinking of moving to the B market," and I'm going like, "You're only 1.5% higher than the B market, right?" And so I'm going like, "That's a very good number. You should probably do your thing per year with that, and then look at it, right?" So especially because it was a rental. So,
are you finding a lot of private or mix are renewing clients, or are you finding that they're kind of giving we're not going to renew and you need to find another home?
I haven't seen a lot of that this year yet.
Right. Yep.
We have in other years, of course, right? And depending, and that's more probably more on the syndicated side, right? Where the dual investor or two investors are saying, no, we're not going to redo this one, and they have to go somewhere else. So, but yeah, and this year I haven't seen a lot of that. And I do see a lot of the private stuff. Had the good fortune when I first started that was a lot of the business that I was doing, and learned it quite quickly, quicker than most. And with the push for RECA this year is, of course, to have the course. I don't know if you've taken the course or if you have to take the course. It's 4 units. It took one of my newer agents took them 7 hours. So,
oh wow,
yeah. So it's a full day if you're going to sit down and do it, and that's not a bad thing. So we have a live training in the falls. We're just going to follow through with the idea of let's learn a little bit more about private lending. So we've got around, we call it slow dating, not speed dating, because they've got like 15 minutes with 5 different private lenders, right? So
it's interesting that you said that you're okay with that, because I was going to say unpopular opinion. I actually think that's better. I know that sometimes people don't want to spend, the 7-10 hours working on something, but at the end of the day, you're dealing with people's finances, and having that ability to be almost like that one-stop shop. I know my private stuff. I know my alt stuff. Obviously, I know the A stuff.
Right.
And it's nice to see your folks while you educate them to graduate from that private to the alt to the A, and then you've got a client for life. So I think that's great personally, and maybe that's an unpopular opinion that it's 7 to 10 hours or so, but I think it's great that your team is dedicating that much time to learning the process.
Yeah, and we'll spend half of that day just talking about private lending and fraud awareness. So, so one follows the other in some cases, right?
Absolutely.
But yeah, no, it's we haven't done a renewal course in Alberta for 10 years, right?
Okay.
So if we're spending 7 hours every 10 years, then I don't think that's a whole lot.
Hey, less than an hour a year, that's great.
You look at Ontario or British Columbia. I've done so many courses in British Columbia that the MBA BC, I've run out of courses. I've taken everything they have over the last 18 years. So that's not a bad thing. But definitely a big part of our philosophy is to teach people that clients aren't transactional. They shouldn't be, at least, right? And I love getting calls from people that said, "Who was your mortgage broker before?" And they usually say, "I had no idea," right? So did the deal, took the cash and gone, right? So
it's crazy when you think of, everybody's always looking for that new origination. They want that new client. But then if you've done it for a few years, you've got this database of folks that you've really, truly helped out, done great work with, got them into their home or got them out of a jam when it came to debt. Those are the low-hanging fruit to me, that it just takes a simple email, it just takes a simple phone call. And kind of circling back with the AI type component there, I've talked to different brokers who have started to utilize, and they will search a specific lender in their CRM, put today's posted rates, so it kind of will spit out who they should be connecting with, because it makes financial sense for them to pick up the phone and say, "Hey, Mr. or Mrs. Smith, I'd just like to talk to you about the fact that now's the time to refinance or change your mortgage because of the fact that, the break rate is pretty good. Your penalties are going to be minimal. But at the end of the day, it's cool to see the folks that are working their database, but also incorporating that AI component to be able to help, which is amazing. And, I've always wondered through conversations, like, you've got this database of so many folks you've helped out, but at the same time, you're just not calling them because you're hoping they come back. And I wouldn't know what the retention rate would be for somebody that doesn't reach out, but I'm assuming it's less than 25%.
I would think so too. It's I don't chase any business. I don't work with any realtors other than a couple that I have for the last 15 years. Because they just won't go away. But it's but it's funny because all of my business is referral, and it's all because of the CRM programs that we have. And this one, actually, we're all in Velocity, of course, and then the CRM within Velocity, actually AI mines for the other properties that they own that maybe you didn't do the mortgage for, and looks for their closing dates and things like that as well. So it gives you a little extra material coming through every now and then on some different properties that you'll get a shot at it again. So, yeah.
And at the end of the day, it's always nice to pick up the phone and have that warm lead as opposed to that cold one. So by using definitely that info, so that's great.
Yeah, I get calls sometimes, but those ones, if I don't know them, I just Leslie gets my assistant gets the word. So, anyways, we've kind of got over here a little bit. Lots of great topics. I'm excited to see you guys grow and get your foot in the door just about everywhere. The team's getting their head wrapped around it. For them, it's like letting them know as often as you want, what rates look like and things like that. That keeps them interested. And Tariq is great to work with, right? He likes to call me, but I haven't had the heart to tell him that meaning it would be faster. But
we do like to talk to our brokers, that's for sure. We do like to we want to talk about declines if there is one. We want to talk about what else is on folks' desks. And at the end of the day, to your point, Tarek is great. And that's something that we do pride ourselves on. Obviously, we don't have the same volume today that some of the bigger shops have. So we do have those times to make those personal connections. And, we're continuing to expand our team and our roster. And that methodology is not going to change. It's going to be, we have to make these phone calls and we have to do it every single transaction for sure.
Yeah. Excellent. Well, I'm going to let you get back to work, Chris. So thank you for your time. And we're, like I said, looking forward to watching Highclere grow.
We appreciate the opportunity to talk today, Len, and we're looking forward to growing with you, and we're looking forward to growing as Highclere. So thank you very much.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.